Folks back then thought the banks might fail. What saved everything was trust sticking around longer than expected. Money stayed put since people held their nerves. Confidence moved like a quiet current beneath panic headlines. The system creaked but never broke apart completely. Built on trust, it fell apart once confidence and savings faded. A single bank collapsed. Following that, whispers began to circulate. Faster than a whisper, belief crumbled. Folks gathered in rows. Money vanished without a trace. Wall Street froze. It had no center to steer it. A fix never came together. A single choice held back chaos. That moment balanced on one person's mind. This tale begins with a wreck, no warning, just chaos. Out of ruin, systems took shape where none existed before. A nation scrambled, not by choice but necessity. From collapse came structure, quiet at first, then impossible to ignore. Money found new rules because old ones failed too badly. What emerged changed how value moved across time and trust. Not progress. Just survival, sharpened into something lasting. That fall in 1907, a quiet split started deep within America's financial bones. Not one explosion shook the ground. No tremors rolled through cities. No enemy crossed borders. The weak point wasn't gold reserves or laws, it was trust. Institutions fell not from empty vaults but from vanishing confidence. When faith snapped, the rest unraveled on its own. Smoke curled from factories without pause, morning through midnight. A new century began, and everything seemed possible here. People came in waves from across oceans, settling into hard work at steel plants, rails, stations under build. Skyscrapers climbed above streets faster each season. Money flowed without borders, shifting where it pleased. A skyline of dreams rose on busy streets where people chased more than money. Pages of news shouted wins that happened fast, out of nowhere. Doubting the whole setup seemed silly back then, like worrying about rain in a desert. Trouble was meant to stay buried under old headlines. Beneath the surface, things felt shaky even if most ignored it. Speed shaped U.S. bank growth more than caution ever did. Separate institutions ran on faith instead of shared plans. Little backup cash stayed available at any one place. Actual coins and bills were hard to find almost everywhere. What people called money usually wasn't tangible. It lived inside commitments. Written debts. Accounting records. Folks believed the pledges, so everything ran without a hitch. When belief started to slip, things began falling apart fast. What pushed things further into chaos? Trust firms. Not real banks, yet acting just the same. Promising bigger payouts, chasing riskier moves. With barely anything saved up. Survival hinged on people believing it would last. Folks trusted their cash would stay put, simply since it never moved before. This trust? Never pushed beyond a small test. Every fall, the pattern returned without fanfare. Cash flowed out as harvest shifted through markets. Firms closed old bills while lenders pulled back on loans. Usually, the strain stayed manageable. That rhythm turned risky in 1907. Things were already at breaking point. One small push would be enough. It started with a guess. What followed grew from uncertainty instead of proof. Back then, financial markets barely had rules. Deals behind closed doors happened all the time. People twisted prices without hiding it. Trying to grab total control of a market stood out as especially dangerous. Stockpiling shares came first. Then limiting how much got sold. Prices climbed because of the squeeze. Success lasted right up until collapse. F. Augustus Hines had a hunch he might dominate the copper trade. Wealthy, driven, tied to powerful circles, those were his cards. Relying on loans and flawless execution, that's what kept it upright. But reality shifted sideways. Prices dipped when they needed to climb. Trouble moved fast through the network. The firm buckled under the weight. Alone, this situation could have stayed small. Yet numbers don't drive panic. What shifts everything is how people see it. Whispers travel quicker than truth. Soon enough, talk tied Hines to trust firms. Folks didn't study financial records. Fear followed gossip instead. All eyes turned to the Knickerbocker Trust. Size made it stand out. So did reputation. Once its leader stepped down amid strain, that small move felt like a warning sign. Lines formed within hours. Folks lined up wanting their money back. Tellers rushed nonstop behind the counters. What was left in storage dropped fast. When night came, Knickerbocker Trust shut down. Everything after that felt different. Worry spread like wind through trees. People stopped asking about one bank, started doubting them all. Fear took hold, spreading through New York's financial veins. Withdrawals hit trust firms hard, wave after wave. Cash vanished into bank vaults, locked away tight. Loans dried up without warning. Banks refused to lend to one another. Transactions stalled, stuck mid-step. Movement of money? Gone quiet. The whole system shivered under pressure. Right away, the stock market took a hit. With cash needed fast, investors began selling off holdings. Down went prices, sharp and sudden. As losses mounted, brokers got hit with demands for more funds. One forced sale led to another, pushing values even lower. At that point, the New York Stock Exchange came close to shutting down. Shutting it down meant admitting everything was lost. Across the country, belief would vanish like smoke. A different kind of threat marked the panic of 1907. No central bank stood ready. While European nations leaned on their central banks to pour money into shaky markets, America sat without one. Tools held by the Treasury were narrow. Response from Congress crawled at its usual pace. Without any special powers during crises, the president stayed out of financial decisions. Private players took charge instead. Into the heart of it all went J.P. Morgan, yanked by that sucking force of a vacuum. Fear wasn't something he started. Power wasn't what he wanted. Yet when nobody else stepped forward, he was suddenly needed. People believed him simply because of who he was. Others followed his lead just by knowing what he owned. Inside that vast library, decisions about money across the nation took shape. Men in suits, bankers, company heads, government figures showed up without being called. Under stress, choices took shape. A look came to organizations. A few got support. Failure stayed an option for some. Fear gripped legislators when they saw what it meant. What happens next time? What happens when no Morgan exists? A shock rippled through Wall Street that autumn. Complexity outpaced old habits of handshake deals. One man's influence wasn't enough when dominoes started falling. Order needed design, not just goodwill. Without someone standing behind promises, confidence cracked. Soon came investigations. Failures were picked apart by committees. Reform arguments unfolded among economists. That outcome could not be ignored any longer. A single body had to step in, handling money flow, linking banks, stepping up when trouble hit. Fear gave rise to the Federal Reserve System in 1913. That year, the Federal Reserve Act turned into law. After the chaos of 1907, leaders wanted safeguards. A response waited ready when markets trembled. Oversight landed on banks through new rules. Confidence had a shield if trouble stirred again. Frozen markets still echo that October's chill. Since then, each bailout breathes through veins opened in 1907. Behind every sudden cash flood lies a ghost from those days. Because trust cracked open once, now it shapes how crises unfold. Quietly, inevitably, history stays on call. Falls come fast when money structures break. They fail suddenly. When confidence collapses. This truth hits harder today. Speed rules the market. News jumps from hand to hand in seconds. Panic races through wires before thought catches up. Structures are built to hold back chaos, yet faith still holds everything together. If confidence cracks, records prove how fast stability can teeter near collapse. When the fear faded, things didn't stop. That quiet moment opened space for what had been buried to rise. Frost crept across the land when 1907 neared its end, bringing a hush laced with worry. Branches of banks swung open again, yet folks stepped inside with slow steps. Withdrawals came in handfuls, never full fists. Eyes stayed fixed on cash counters, alert. Talk about coins and bills now carried weight. Trust trickled back, grain by grain. Back it came, bit by bit, lurching forward like something unsure. People remembered how quickly things fell apart, memories like that stick around. Frozen credit lingered long after the news shifted away. Plans for growth gathered dust. New hires became rare. Spending on innovation stopped. Survival meant getting smaller for many firms. Paychecks barely changed for those still employed. Jobless workers faced stretches of silence between applications. Months passed before some found footing again. Fear didn't wipe out wealth fast, yet it changed how people acted. Danger was no longer a distant idea. Now it sat close, like something spoken to directly. It wasn't the fear that shook officials, it was how near everything came to stopping dead. Suppose JP Morgan paused even slightly. Imagine if competing banks held back instead of helping. Picture another major firm collapsing on top of that. Recovery could have been impossible. Leaders in power and money circles felt unsteady after grasping that. Anger came after clarity settled in. Regular people began wondering about something new. Could it really be right that a single money handler held so much power? Lives of businesses tied to choices made behind closed doors by bank figures who answered to nobody. Officials stepping back while everything hung in balance. No roadmap at hand when things started to crack. Questions like that demanded attention. Sessions took place under oath. Witnesses revealed habits that ignored risk. The inquiry traced ties between financial players, banks, brokers, trusts, corporations. Their discovery? Not a plot. Just an unstable buildup of influence. Power gathered in too few hands. Supervision nearly absent. Trust treated as enough protection. Off to Europe went senators, alongside financial minds. Studying foreign banks became their task. Watching how central banks moved when trouble hit. Liquidity, how it flowed in tight moments, drew close looks. Controlling fear, stopping runs on banks, mattered just as much. What stood out became clear right away. Under pressure, Europe's setup struggled badly. America's gave way completely. Then came words, loud ones. Not everyone agreed. A few saw danger in strong authority above all else. For some, chaos was worse than rules. Talk spread across towns about who should decide, what people could keep, whether leaders were worth believing, same questions as before, when trouble last struck. This moment felt different. Back then, 1907 clung close. Markets locked up, cold and still. People stood quiet in line at banks, eyes tense. It hit clear, whole systems can unravel fast. Change crept forward, yet it did not stop. That year, a deal finally closed. Built to wobble, never smooth. Crafted on purpose, one hand pulling back, the other pushing forward. Power split, local vaults here, distant voices there. Blame could spread when things cracked. When panic came knocking, someone had to answer. Someone always did. A shock gave rise to the Federal Reserve, not an idea. It emerged when chaos hit, shaped by crisis instead of calm planning. That was the idea behind it. If things got chaotic, money stood ready. Banks under pressure could count on backup. In moments of dread, someone had their back. It never aimed to stop every mistake, just keep one downfall from pulling everything down. Faster than anyone forgot the Great Depression, people stopped talking about the panic of 1907. Pictures of empty streets didn't stick around. You won't find crowds waiting for food on every corner in old photos. Jobless numbers never got carved into history lessons. Still, its mark whispers through today's money systems. It started in 1907, though few say so outright. When markets freeze now, someone reaches for that old playbook instead of something new. Central banks step in, because they always have since then. Behind every rushed deal meant to calm things lies a pattern set more than a century ago. Even those hushed meetings over weekends? They echo choices made long before our time. Still, the core idea stays just as it was. Facts do not hold banks together. Faith does that work instead. When someone lends money, it means they rely on another person showing up later. Money placed into account stays there because folks expect safety ahead. Trading happens less due to laws than the quiet assumption others will follow through when time comes. A shaky moment in 1907 opened eyes across the US. About how thin the line really is beneath strong economies. Things holding steady? That takes constant work, never just happens on its own. When people believe in the system, that belief needs structure behind it, propped up through actions, guarded over time, never taken for granted. This time it stuck. Different shapes now. Tools keep changing. Everything moves faster. Out of nowhere, old fears wear new labels. Tools shift, yet the tension sticks around. Always, it's the dread that stays put. This tale sticks around for a reason. It holds together only because trust keeps it standing. What seems invisible grows obvious when it's gone. Suddenly, you notice it in abandoned offices. You hear it in halted production lines. It shows up where families tighten belts, scared of what comes next. That shift hit hard after the financial chaos of 1907. Faith held it together, not receipts or ledgers. When trust cracked, motion faded. Everything just paused. What set this crisis apart wasn't its start, yet how close it came to collapse. No backup plan existed. No official guide laid out steps. Staying afloat meant rushed talks behind closed rooms, scribbled numbers on paper, trust in known faces. A single error might have rewritten everything that followed. The whole thing stayed upright, less due to design, more by chance than strength. Anyone looking into money matters would feel uneasy about that truth. Not every step forward removes weakness. Bigger doesn't mean safer by default. When things get complicated, danger can grow rather than shrink. Once links multiply across a network, panic spreads quicker than before. A tremor in 1907 slipped through cracks most ignored. Not with shouts, but whispers it started. One bank stumbles, called bad luck. Another wavers, seen as separate noise. Trust seeps out before anyone names it gone. When fear finally shows its face, the ground has long been shaking. A pattern shows up when people stop trusting one another. Dates fade, names blur, yet this remains clear. Power shifts as leverage builds quietly. Safety measures hesitate while new tools rush ahead. Discipline gives way to what feels true instead of what works. Each time, the setup looks familiar, different gadgets, same outcome. Faster now, the way money moves. In moments fear takes hold, not hours. Where traders once stood, glowing glass sits. Machines trade where people talked. Yet inside, reactions stay the same. Logic trails behind dread every time. Rising trust vanishes quicker than it arrives. A shakeup in 1907 didn't fix everything. Still, things changed after that moment. Ideas shifted about control, cash, who must step in when systems wobble. What came later grew out of those cracks, built by people who'd seen markets fray at the edges. Not hope drove it, just experience carved deep during tough days. This tale changes the way you notice today's upheavals. When banks collapse, markets lock up, those moments feel sudden. Yet they're not random events. History repeats through them. A good place to start? Look at times just like this one. When it comes to seeing where power, cash, and belief crash into each other, diving deep into real cases makes things clear. This channel shows exactly how we spend our time here. What if cash has secrets? Dollar Story uncovers the past of money, moments of fear brushed aside, unseen pressures pulling strings. Choices whispered behind closed doors changed everything. Not flash, never fast fixes. Just honest tales revealing how things truly fit together. Should this tale shift how you view money, then join Dollar Story. A fresh take might just stick around once you sign up. Money carries history. That story shapes where you are now.